All right, Talk Ticker fam, time to dive deep into General Dynamics Q4 2024 earnings call, and this one's got it all. Soaring revenue, those pesky supply chain issues we all love to hate, and a peek behind the curtain of what's driving defense and aerospace these days.
Yeah, it's a real snapshot of how global events are shaping some pretty crucial industries. We'll be breaking down what these numbers actually mean, not just for GD, but for the bigger economic and geopolitical landscape.
So let's get right to it. What were the top line numbers from this call?
Well, first off, you can't ignore that revenue number. A cool $13.3 billion for the quarter. That's up a hefty 14% year over year. And for the whole year, they brought in over $50 billion. But it wasn't just a revenue bonanza. Earnings per share were also up 14% for the quarter and over 13% for the year. They absolutely blew past expectations.
Wow, impressive stuff. Okay, so they're making money hand over fist, but we know GD had some hurdles this year. Let's break it down by segment. Starting with aerospace. They were the stars of the show, weren't they?
Definitely had a banner year. Revenue jumped over 30% year-over-year, landing at $11.25 billion. That insatiable hunger for Gulfstream jets, especially from international buyers, was a huge factor.
And the G700, their new flagship jet. Everyone's been waiting for that one. How'd that play out?
Well, that's where things get a little bumpy. They did deliver 30 G700s for the year, which sounds great, but it's less than half of what they originally projected. Production delays really threw a wrench in their plans.
So what exactly happened? Give us the inside scoop.
Well, it was kind of a chain reaction. First, engine deliveries got behind schedule, then those fancy custom interiors, all the bells and whistles. They added complexity to the certification process. And then on top of everything else, a supplier quality issue popped up late in Q3. Talk about bad timing. They had to replace parts on a bunch of jets, which meant more inspections, more test flights, the whole 9 yards.
A real headache for GDT. So how does all this affect the G800, their other highly anticipated jet? Are we looking at a repeat of the G700 saga?
Seems like they're trying to learn from their mistakes. They're saying G800 certification is expected in the first half of this year, but they're being much more conservative with their delivery projections this time around.
Smart move, managing those expectations. All right, let's shift gears to the defense side of the business. With all the global uncertainty, I imagine those divisions were humming.
Absolutely right. Combat Systems had a strong year revenue, up almost 9%. Demand for munitions and vehicles is through the roof, both here in the U.S. and internationally. Their order backlog is almost $17 billion.
Wow, that's a nice cushion. But also a lot of pressure to deliver, especially with the supply chain issues they're facing.
Yeah.
What about marine systems? They're the submarine folks, right?
Yep. And they actually saw the biggest revenue jump of all the segments, over 15%. The Columbia-class and Virginia-class submarine programs are in full swing. That's driving that growth.
But I recall something about margin pressure there. What was behind that?
Unfortunately, those supply chain problems we talked about in aerospace are hitting the submarine business even harder. We're talking inflation, labor shortages, and quality issues, all putting the squeeze on margins.
Ouch, that's got to sting.
Yeah.
So how are they handling this? Did they mention any strategies for tackling these issues?
Well, there was a glimmer of good news. Congress recently passed a continuing resolution that includes extra funding for the Columbia-class and Virginia-class construction programs.
It's a bit of relief for the Navy and GD.
It definitely gives them some wiggle room to cover those rising costs and invest in workforce development. The bigger question is whether it's enough to fix those underlying supply chain problems, which, let's face it, are plaguing the whole industry.
Right, good point. Okay, last but not least, let's talk technologies. They always seem to fly under the radar, but consistently deliver solid results. What were the highlights there?
They're the steady Eddie delivering as expected. Both GDIT and Mission Systems had good years with slight revenue increases and stable operating margins. GDIT, in particular, landed some impressive contracts, partly thanks to their investments in cutting-edge tech like digital accelerators. These things help them develop software solutions much faster, which is crucial in the fast-paced world of defense technology.
So putting it all together, it sounds like a pretty successful year for General Dynamics, despite the challenges.
Absolutely. They're riding high, but they're not immune to the headwinds everyone's facing. The question is, can they keep this momentum going?
That's the million-dollar question. It'll be interesting to watch how they handle those production hurdles in aerospace and navigate the uncertainties in defense spending. But hey, that's what keeps things interesting, right? Speaking of interesting, you know what time it is?
Uh-oh. Here we go.
It's time for our completely irresponsible yet strangely plausible trade idea.
Hit me with it.
Yeah.
What's the play this time?
All right, so we've got all this drama with the delayed G700s, those fancy custom interiors and potential supply chain ripple effects. What if we short lumber futures?
Wait, are you saying those engine troubles could lead to a surplus of wood originally meant for luxury jet cabins?
Precisely. Lumber prices take a nosedive, we rake in the profits. It's a long shot, but you got to admit it's not totally outside the realm of possibility.
Risky, but I kind of like it. Just remember, folks, this is purely hypothetical and probably the worst financial advice you'll ever hear.
Don't come crying to us if you end up with a portfolio full of splinters. Do your own research, people.
Always solid advice. Okay, so let's zoom out a bit. Look past the numbers themselves and see what these results tell us about the bigger picture. GD's performance is like a window into how global events are shaping industries like defense and aerospace.
So what's the story here? What trends are we seeing?
Well, on the aerospace side, it's a classic supply and demand tale. Demand for private jets is going through the roof, driven by a bunch of factors. You've got a strong global economy, rising wealth inequality, and, those lingering concerns about commercial travel in a post-pandemic world.
Right, so people with money want to travel quickly and privately.
Makes sense.
And they're willing to pay a premium for it.
Exactly. But as GD's production struggles show, it's not just about demand. The supply side is incredibly complex. With all those intricate supply chains and the need for a highly skilled workforce, any little hiccup, whether it's engine delays or quality control issues, can throw the whole system off.
And on the defense side, it seems like geopolitical instability is the main driver. That's why we're seeing such strong demand for combat systems and submarines, right?
You got it. International conflicts, rising tensions between global powers, it all adds up to increased defense spending. And companies like GD are the ones reaping the benefits. But there's another layer to this. The nature of warfare itself is changing.
Right, it's not just about tanks and submarines anymore. It's about cyber warfare, space-based assets, AI-powered weapon systems, a whole new ballgame.
And that's where GD's technology segment fits in. They're quietly positioning themselves to be major players in these new arenas. Their investments in areas like digital accelerators and space ground systems could pay off big time down the road. These digital accelerators, by the way, are basically platforms that help them develop and deploy software solutions much faster, which is crucial in the rapidly changing world of defense tech.
So we've got a company with its fingers in traditional defense, cutting-edge technology, and luxury travel. What's the takeaway for investors? Is GD a buy right now?
The million-dollar question. If only I had a crystal ball.
Figured you'd say that.
But I can say that GD is a well-managed company with a solid track record. They're in industries with strong demand and lots of growth potential, but they've also got those real challenges, especially on the production side.
Some analysts are skeptical about GD's ability to hit those production targets. Given these ongoing supply chain issues, what's your take?
It's a valid concern, for sure. Remember that day when Army contracts were abruptly turned off, then back on?
Yeah, what was that all about?
Who knows? But it highlights the unpredictable nature of defense contracting. These companies are at the mercy of government budgets, shifting political priorities, and always the risk of program cancellations or delays. It adds a layer of uncertainty that investors need to factor in.
So investors need to weigh those risks against the potential rewards. Sounds like a high-stakes game.
It definitely is. To me, the key takeaway is that GD is a company in transition. They're balancing strong demand with supply chain headaches and a shifting geopolitical landscape, trying to adapt to new realities and capitalize on emerging opportunities.
So it all comes down to execution. Can they overcome those production hurdles and deliver on those impressive growth projections?
Exactly. That's the question investors need to wrestle with. And as we've discussed, there are a lot of factors at play that could influence their success or failure.
So there you have it, folks. General Dynamics, a company juggling luxury defense and cutting-edge technology.
And let's not forget about those supply chain woes. They're like that one friend who always shows up uninvited.
Too true. But even with those challenges, GD pulled off a pretty impressive performance. What surprised you most in this earnings call?
You know what really stood out to me? That stark contrast between the explosive growth in aerospace and those nagging supply chain issues. It's like a microcosm of the balancing act companies are facing these days.
Yeah, it's like two worlds colliding. On one side, you've got people clamoring for private jets, pushing demand and prices way up. And on the other, you've got those nitty-gritty production problems that can really throw a wrench in the works.
And it's fascinating how those problems affect both the luxury market and the defense sector. Who knew a delayed engine could impact a billionaire's private jet and a state-of-the-art submarine?
Right. It really highlights how interconnected everything is. That's what makes analyzing these situations so interesting. It's not just about the numbers. It's about understanding how global events, technological advancements, and even human behavior all tie together.
It also reminds us that even the most successful companies aren't immune to things they can't control.
Well said. Okay, folks, that's a wrap on General Dynamics. We'll be watching this company closely in the coming months, especially with those G800 deliveries ramping up, and as we get a clearer picture of how they're tackling those supply chain headwinds.
And who knows? Maybe we'll circle back to that lumber short idea down the road. Just kidding, folks. Please don't base your investment decisions on our jokes.
Words to live by. Thanks for joining us on Talk Tickers. We'll catch you next time with another deep dive into the world of earnings calls. Until then, happy investing.